Welcome to the All Facts Matter podcast, where we push back against corporate media propaganda with facts, evidence, and data. I'm Peter, the author of All Facts Matter. Let's begin. Wall Street had been fully prepared for the Fed to trim the federal funds rate yesterday. Wall Street had fully priced in a 25 basis point rate cut. The Federal Reserve delivered a 25 basis point cut to the federal funds rate. So why did Wall Street have a down day yesterday? The short answer, Jerome Powell held a press conference. Powell proved yet again that he is truly gifted. With a few ill-chosen and artless words, he can scare the bejesus out of the most thick-skinned of Wall Street speculators. In a press conference that was supposed to be all about good news, Powell managed to inject bad news at all the wrong places. Now, yesterday began in seemingly positive fashion for Wall Street. Wall Street had, after all, fully anticipated the Federal Reserve's Federal Open Market Committee would conclude its meeting by trimming the federal funds rate another 25 basis points to a target range of 4.25% to 4.5%. And in fact, Wall Street has been pricing in this rate cut. Ironically, they've been doing that by bidding up the Treasury yields, extending an upward trend in yields that has held since the jumbo rate cut earlier this fall. Yeah, which is interesting because while the expectation may have been that the Fed would trim the federal funds rate, the rest of the economic outlook is apparently less than rosy in Wall Street's estimation. When the street bids yields up, that generally does not mean they expect happy days to be right around the corner. Still, a rational person would think that Wall Street would be thrilled that the Fed did what was expected of them and trimmed the federal funds rate by the anticipated 25 basis points. The rational person would, of course, be wrong. Now, the Federal Reserve did do what was expected. They did trim the federal funds rate by the anticipated 25 basis points. After that, Wall Street went into a mini meltdown, tanking stocks and spiking Treasury yields. The Treasury yields surged during his press conference, with the 10-year Treasury taking back nearly all of the 25 basis point rate cut that the Fed announced for the federal funds rate. And the 30-year, 2-year, and 1-year Treasuries all jumped up by similar amounts. Now keep in mind that yields are the inverse of price. When Treasury yields spike, their price is plunging, which is what they did in response to Powell talking. Now, the Dow, which had been holding steady, plunged. It ended up closing down 1,100 points on the day, and the S&P and the NASDAQ followed along for the ride. The only people who were happy on Wall Street were the Forex traders who were betting on the dollar. The dollar surged when Powell started talking. They like hearing Powell tell the rest of Wall Street that inflation is going to be higher for longer and that rate cuts are therefore going to be slower for longer. This is hardly the rational response to the Fed doing what Wall Street wanted and expected. Of course, no one ever said that Wall Street was rational. Certainly, I've never said that Wall Street was rational. So how did Powell manage to spook the market? For starters, he doesn't know when to stop talking. He just can't help himself. He always wants to over-explain things. And that's when he blunders into the sort of truth-telling that Wall Street just doesn't want to hear from him.
But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
Of course there's uncertainty. How can there not be uncertainty when Powell has no idea what he's doing on interest rates or inflation? Wall Street doesn't want to hear uncertainty. That's not the narrative they want. They want a narrative of, yes, we know what we're doing, and yes, we've got this under control. Doesn't matter if the narrative is true or not. That's what they want to hear. And Powell didn't give it to them. Of course, it's hard to avoid upsetting your audience when the facts themselves are upsetting. And the fact is that the Fed hasn't really made any progress on inflation lately. And Powell openly admits this. And all you have to do is just look at the charts. They tell the tale. Progress has slowed. Progress has slowed on headline inflation. Both the CPI and the PCE show that, hey, inflation was coming down at a pretty good clip, but since middle of last year, not so much. Progress has pretty much stopped on core inflation. Again, it was coming down, and earlier this year, it flattened out. PCE's even ticked up a little bit. This means that there's no progress being made on inflation. Progress has even slowed on services. Again, it was going down at a decent clip, but it's flattened out, and in the PCE, it's even ticked up a little bit. And even energy deflation, which had been dropping pretty good for a time, since late last year, not so much. It's been a lot shallower. It's been a lot less. Across the board, inflation hasn't been improving as fast as it was, and that means that by every normal metric, Powell's rate cut strategy hasn't been working as well as it was, assuming you believe that it was working at all. Now, what should upset Main Street, however, isn't whether or not Powell is pushing down interest rates or talking up interest rates. But what should be upsetting to Main Street is Powell likes unemployment. He views a softer labor market as something that is welcome.
If the idea, though, is that no additional kind of softening the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think.
Now let that sink in. Powell is welcoming of fewer jobs. Powell is approving of less employment. No wonder he thinks he's striking an optimistic tone. The economy is giving him exactly what he wants. As the Philadelphia Fed confirmed last week, employment is on the decline in this country and has been for quite some time. Remember, job growth all but stopped in 2022. We've been seeing actual job loss since about November of last year. It's a full year at this point. If we zoom in, we see, yeah, this is, you know, it was going up, but since November, it's it it has not been moving up. It tried to stage a bit of a recovery earlier in the summer, but that hasn't held, and it's now back down again. We're losing jobs. The data shows that we are losing jobs. Powell must be ecstatic. Yeah. And so once again, Jerome Powell has proven that ignorance really can be bliss. He is blissfully unaware of what inflation is doing to the actual economy, to the wallets and the bank accounts and the paychecks of working men and women. He is blissfully unaware of how little comfort even Wall Street takes in his artless and bumbling responses. He is blissfully unaware of the callousness in his logic about the virtues of a softer labor market. It just never dawns on him that softer labor markets mean more people are out of work and that there are fewer jobs to go around. He is blissfully unaware that the labor markets have been softening for quite some time, or that even the Philadelphia Federal Reserve, in other words, his own people, have established that labor markets are in far worse shape than he wants to believe. Jerome Powell is blissfully unaware that he really is a true expert for the modern era, which is to say, he really is just a blithering idiot. Unfortunately, Powell is a blithering idiot in a position where his ignorance can, and has, cost people their jobs and the economic security even a modest paycheck can provide. Judging by his bumbling performance yesterday, he will continue to do damage. Ignorance may be bliss for him, but his ignorance is permanent heartburn for everyone else. And that concludes this presentation. I hope you found this podcast helpful and informative. Please like it and share this with your friends. Word of mouth is how I publicize my work. Please also consider making a one-time donation or becoming a paid subscriber to All Facts Matter. Your support is what keeps this work going, and I greatly appreciate all of my subscribers. Without you, this work would have no meaning. I encourage everyone to be especially generous with feedback. Leave a word or two in the comment section so that we can keep the discussion going and that we may learn from each other. Thank you all for listening, and have a nice day.